Hello, once again, and welcome to another class session. The topic for the day is dissolution of partnership. Dissolution of partnership. As you are aware, we started with partnership count. After the partnership account, where we talked about the final account of a partnership business. As a partnership business, you are to prepare the trading profit and loss account, the operation account, and also current account and a statement of financial position, which is also known as the balance sheet. We proceeded also, we talked about the admission of new partners, under which we talked about the capital accounts, and we also talked about the goodwill in case there is a new partner that is coming in, is bringing in a goodwill. We also touched on revaluation of assets when a new partner is coming in, that is a revaluation account. But today, we are moving to another aspect of partnership, which is about dissolution of partnership business. We are going to talk about the meaning. These are the learning objectives for the topic. We have to know the meaning of dissolution of partnership. We should be able to state as a student causes of dissolution of partnership business. And also, we are going to look critically into the Partnership Act. What are the parameters? What are the sections that deal with dissolution of partnership? Also, we are going to look into the accounting system, accounting entries that will be executed when a partnership business is dissolved. First, let's talk about dissolution of partnership. What is dissolution of partnership? In a layman language, when we say something dissolve, what comes to our memory is a solid, let's say an ice block, dissolve turns to water. In such a situation, it means it is not handy, it becomes liquid. But that's just for the layman perspective. Now, coming to accounting terminology, when we say a business dissolve, a partnership business dissolve in this context, it means the partnership business is breaking up. It means it's coming to an end. The coming to an end of a partnership agreement will also lead to the dissolution of partnership. There are many factors that can result to this. One of the factors is when a partner dies. When a partner dies, also when there is a bankruptcy on the part of a partner, when time fixed for the partnership agreement has expired. What this means is that in the partnership deed, there is a time frame for the business to expire. Once this business, the time has exceeded, the partnership business ceased to exist. Also, we also have retirement of partner. I wouldn't want to waste much time on these aspects. It's something that can actually be read and understood. When a partner is declared insane, you can't enter into a contract, and the partnership is a contract. When there is a joint decision to discontinue the business, that is mutual agreement by the partners to dissolve the partnership. When the partnership consistently make loss, when there is continued perpetuity of loss, it has affected the going concern principle. Definitely, the business has to close down. On amalgamation into a bigger partnership, illegal. When you enter into an illegal business, once you enter into an illegal business, irrespective of whether you have a legal business, whatever contract you have, it becomes illegal. So the partnership dissolves. When the partnership is converted into a limited liability company, of course, that's an improvement into the business. So definitely the partnership ceases to exist. Then we now have a new company called the limited liability company. And also when there is a disagreement among the partners. If there is disagreement among the partners, it can also lead to the dissolution of partnership. Now, on a quick note, let's look at the procedures for distribution of assets in the case a partnership business ceases to exist. We are going to be focusing more on Section 44 of the Partnership Act, which says that subject to agreement, the following procedures must be followed in the event of dissolution of a partnership business. Number one is that losses must be paid out of capital. Two, payment of debt and liability to outside creditors. What this simply means is that whatever proceeds of assets or sale of assets you must pay all the creditors before you can share anything among the partners. So payment of partners loan, if there is a partner that's giving the business a loan, you must pay, settle the partner. Settlement of partners capital also, and also any profit on realization must be shared in the profit sharing ratio. All these are sequential. Is a stage, one step after the other. You cannot go for step 4 before step 1. The first thing is that all losses must be paid, then followed by payment of debt, then payment of partners loan, then settlement of partners capital, then before the profit can now be shared among the partners. Now let's look at the accounting entries. These are the accounting entries that must be prepared when a partnership business is to be dissolved. The first is to open a realization account. The realization account is opened in order to retrieve money, cash from the sales of assets. When a business is winding up, a partnership business is winding up, all the assets are sold. So all the money that you realize from the sales of the asset are recorded into the realization account. The realization account has two sides. Definitely all accounts have two sides, the debit side and the credit side. The debit side is used to record the net book value of the asset, while the credit side is used to record the cash received from the sales of the assets. Number two, when some has been spent as realization expenses, also called dissolution expenses, to facilitate the sales of an asset, it has to be recorded into the realization account also, and it's to be debited in the realization account, while the cash account is credited. Also, we also have the amount realized from the sale of asset is debited to cash account and credited to realization account. I've explained this earlier when I said the cash proceeds from the sale of asset is credited into the realization account. So the corresponding entry, which is the debit entry, is that you are going to record it on the cash account. Sometimes we call it cash book. So also the fourth entry is the liability of the partnership as settled by crediting it to a cash account and debiting to individual liability account. All these would be practically solved, and a new video will be made to cover this. Then number 5, in the event of a partner taking over an asset, his capital is reduced by debiting it and realization account credited with realized or transfer value of the asset. The balances on realization account represent profit on realization. Definitely, the essence of having a realization account is to know whether there is a profit on realization or loss on realization. How will this occur? When the amount realized from the sale of asset is more than the net book value of the asset, we see that we have made a profit on realization. But if the reverse is the case, when the net book value of the asset is greater than the cash realized from the sale of the asset, we'll say there is a loss on realization. So in case partner has a debit balance in his capital account, the partner is required to pay the amount in cash in order to balance up the capital account. We are going to look critically into different case scenarios, and practically solve it one after the other in subsequent video. Thank you. But before I go, let's just look at the format of realization account. Sorry for That is very important. This is the format. Realization, we have the net book value of assets on the debit side, cash realized from the sales on the credit side. All these are practical. Well, then also we also have the cash book, also known as the cash account. Then we have the columnar capital account. So those are the three aspects, three accounting entries that you are going to get in the dissolution of partnership. So I think in order not to make this video too bulky, it is necessary to stop at this particular stage. Thank you.